let's go back to our screen here. We'll pull this down and good. All right, can you see my screen that says the CARES Act Fiscal Stimulus Plan? Is that
Yeah,
available?
screen looks good.
All right, perfect, thank you. All right, we're gonna be jumping right in. Oh, I already have a question right off the bat. All right, oh, James can see it. Thank you, James, appreciate the feedback. Okay. Folks, thank you so much for being here today. We've got just a critical information to share with you on the financial stimulus package that was passed last Friday. And we just really want to kind of tell you where we're at in the process, because a lot of things are still up in the air. A lot of people are hearing different things. So we're going to break it down and we're going to tell you what's what. And we're going to tell you how this all works and who qualifies. Now, the details are still being worked on. We're going to kind of go over that a little bit more in detail, but because the details are still being worked on, that means a lot of stuff is in what we call a gray area. So all of this is in flux. So let's just jump right on in and talk about what we actually know. Okay, so here's the overview. If you don't already know, the CARES Act stands for the Coronavirus Aid, Relief, and Economic Security Act. This was the bill that was signed last Friday by the president, passed by the Congress. It addresses the impact in response to the COVID-19 coronavirus outbreak. This bill authorizes emergency loans to distressed businesses. I mean, in the bill, they talk about the air carriers and they talk about hotels. We're not going to be really covering that. But with respect to small business, the bill establishes and provides funding for and forgivable bridge loans, and also provides additional funding and grants and technical assistance. Now, there isn't any information out on the grants. Like, they've set aside like $17 billion for grants. No information out on those grants, so we're not really going to be covering the grants today. But there is a lot of information that is out there. So in this bill, if you didn't already know, it also provides for $1,200 tax rebates to individuals. So, I mean, that's with $500 payments per qualifying child. So this is obviously on the personal side. If you've already filed your taxes before in the past, if you did it electronically, then you receive your payment electronically. If you filed through the mail, then you'll receive a check in the mail. But the rebates, they phase out, so you get the full amount up to $75,000, and then it filters out up to $99,000 or $150,000 if you're married. So the bill establishes limits on the requirements for employers to provide paid leave. So with respect to taxes, the bill establishes special rules for certain tax favored withdrawals from retirement plans. So a lot of times when you pull money out of, say, your 401k, even, there's a penalty. Well, they're easing up on these penalties. Delay due dates for employer payroll taxes, and they've been pushed back. Estimated tax payments on corporations. They've revised provisions, including those related to losses, charitable deductions, and business interests. So the bill authorizes the Department of the Treasury to temporarily guarantee money market funds. So this is all huge. But, and again, we're just going off of what's in the bill, right? There's a huge difference between what lawmakers and bureaucrats do up in Washington, D.C., and what actually happens with the banks and the lenders. So you can get access to all the same information if you go to congress.gov/bill. You know, you see the link there on the bottom of your screen. Take a screenshot of that if you need to. The point is, all the information I'm sharing with you is just what's been read out of the bill, but still we haven't seen any of the actual guidelines come out. So let's focus on how this applies to us business owners. So, I mean, I just got through the overview of it, but let's talk about the Paycheck Protection Program, PPP. Who can make these loans? Well, lenders with delegated authority from the SBA. Now, the SBA hasn't actually laid out any guidelines, so we don't know who these lenders are yet. But this lets lenders determine once they've been delegated the authority from the SBA and been given the guidelines, this will let lenders determine the eligibility and the credit worthiness. We don't even know what the credit worthiness guidelines are at this point, but they'll be able to do so without. I mean, the wording in the bill states that there's a possibility that you could even bypass the SBA. The SBA, once they lay out the guidelines and then they delegate the authority, they might actually not, may or may not be in the picture. So there's a lot of gray area here. Again, a lot of this is shifting. This law was just passed last Friday, and we still don't yet have the guidelines. So how will banks actually, according to the bill, evaluate borrower's eligibility? Well, here's how you know if you're going to qualify. If your business was established and in operation and in good standing on or before February 15th of this year, 2020, then you are eligible. Now, this is called the Paycheck Protection Program. So the goal of this program is to protect the employees, to keep businesses in business, but for the purpose of protecting employees' jobs. So you have to have a business and you have to have employees for whom, you know, the borrower paid salaries or payroll tax. Or here's something really important too. There is language in the law that shows that even if you paid independent contractors through a 1099 MISC form or miscellaneous. So the application period, now here's what's very important. Nobody actually can apply right now. So I'm going over this information. You're like, oh, who do I apply? The reason we don't know who to apply is because the SBA hasn't laid out the guidelines and they haven't designated who the lenders are. Now, there is, I mean, I don't know if I'm getting ahead of myself, but there is possibility that they're going to allow fintech, and that's a acronym for, you know, financial technology, secondary lender markets, you know, like Cabbage, you know, as one. There's a lot of different secondary lenders that are out there. And if that's the case, that'd be really great. Now, the language in the bill does support that. And that makes sense because right now, with just the normal amount of loans and the regular amount of SBA loans that are out there, banks are getting completely overwhelmed. So it makes sense that if they open this up to other types of lenders in the secondary lending market, that we could see this could be really big. This could be very powerful. So, but keep in mind that your application period is between February 15th, which is, I don't know why they picked that, obviously, because the bill just passed last week, but to June 30th. So this is that February 15th makes sense because there was another bill that was previously passed, which covered the economic injury and the Emergency Act, where the SBA had an extra $50 billion that was placed into their care. So it's probably a mixture of those two. So Paycheck Protection Program, size requirements. Any small business, nonprofit, veterans organization, sole proprietorship, independent contractor, eligible self-employed individuals, or tribal small business concern is eligible for the loan if they employ no more than the greater of either 500 employees or it's your SBA side standards based off of your NIACS code. I mean, that's a very small percentage of people. But anyway, it just shows that there's some flexibility there. But here's what's important about this right out of the bill. Normally, when you apply to an SBA for an SBA loan, you've got to be an actual entity, an actual business. But if you see coming from the actual language of the bill, they're actually opening this up to sole proprietorships, independent contractors, self-employed individuals. So this is important. But I mean, you might be a sole proprietorship and be like, yeah, this is exciting. Keep in mind though, this is the Paycheck Protection Program, so it's designed to protect employees. So I mean, you might be, well, I'm an employee. Well, it depends on how you do your taxes, right? If you're an employee. But yes, if you have one employee, you have 500 employees, then this actually applies. Now, employee includes anybody employed on full-time or part-time basis. It says or other basis because remember we talked about the In the previous slide, we talked about independent contractors. So for businesses with more than one physical location, like let's say you're in food services with restaurants, it's just $500, 500 employees or less per location, right? So it's not, if you have this chain and you have thousands of employees, no. It's going to be per location. So that's another way. That's another way that it helps. So the Paycheck Protection Program. So the maximum loan amount under the Paycheck Protection Program is 2.5 times the average total monthly payment by applicant payroll cost incurred during 1 year before the loan was made. So the example given to me was, if you get approved for this loan on April 1st, or obviously we're past April 1st, but let's say May 1st. Let's go to May 1st. May 1st, they're going to go back and check May 1st of 2019 all the way through to May 1st of 2020. And they're going to be looking at your average monthly totals of what you pay your employees. Okay. And so based off of whatever that average is over the 12 months, then you could qualify for up to 2.5 times that total. So, or again, you see the 3 bullet points here on your screen, which means it's going to be the lesser of these 3. So you could also plus outstanding amounts of emergency injury disaster loan. That's the one we were just talking about with the with regards to the last bill that was passed, which gave an extra $50 billion to the SBA. So people were applying for that because they could show that there was actual economic hardship, their business, that this government shutdown of the private sector had hurt them in their revenue. And so they were applying for the emergency industry disaster loan, called, for briefly EIDL. Now that was a standard SBA program, which means you need business credit, which means you need a good FICO score, and you need cash flow and collateral. You still need all the basic SBA requirements. And so, so if you're applying for that, what this is saying is you can't have both at the same time. You can't, okay, I'm going to go get 10 million or a million or 100,000, whichever amount you're applying for. Let's say you're applying for $300,000 with the emergency injury disaster loan. Well, again, it's going to, if you apply for the Paycheck Protection Program, it's going to take into account what you've already applied for through the SBA. So let's say you qualify. Let's say your total payroll average, to make math easy, for a month is $100,000. Well, that means you could apply for up to $250,000. But if you've already applied for $300,000, right, you're going to get the lesser of the two. That's basically how the wording works. Or lastly, if any amount under $10 million. So this Paycheck Protection Program has a cap of $10 million based off of, your employees. So if you have 500 employees and you're trying to make sure you get them all paid, that's what's important here. So there are special rules for seasonal employers and businesses that were not in existence back in February of 2019 to June of 2019. However, those guidelines are not out there. So I mean, there's a stipulation in the wording of the law, but there is no guideline that's laid out for that. So let's talk about payroll costs. So what can you use the money for? If you get the loan, what can you use it for? Well, you can use it for paying for compensation of employees. You can pay for salary, wage, commission, or similar compensation. I'm sorry, payroll costs. I'm sorry. Let's back up. This isn't what you use the money for. I'm sorry. This is how you calculate what money that. Okay, so remember, we're looking for, if we go back, what is the we're looking for what's the average that you paid your employees over the last year. Well, what do you get to include in that? This is information that you really should be collecting right now, since you can't technically apply yet, because again, the standards haven't been released and the lenders haven't been announced. we can assume it's going to be the major banks at least, but if they open it up to the secondary market, then there's a lot of other options that become available. But so what can you count as your month, as part of this money that goes into your average monthly cost? Salary, wage, commission, or other compensation, payment from cash, tips, or the equivalent, payment if you for vacation, parental, family, medical, sick leave. Anytime you're paying for this for your employees. If you did have to have, if you furloughed employees and you gave them an allowance, that could go in there as well. Or if you actually had to let someone go and you gave them a severance package, that counts as well. Payment for provision of group health care benefits, including insurance premiums that you contributed as the employer or contributed. And the payment of state or local All right. Hello, folks. Hello, Akili, Damon, James, Karen. We had a little bit of some technical difficulties here. And I don't know what everybody was able to hear. So I might just have to start my presentation over again. Let's see.
No, I mean there was some loss, but you'll be fine. It was cut out
What
for
I'm
a
going to
little bit.
do to make sure that we aren't losing, that I'm not taking up too much bandwidth is I'm going to take my picture off the screen, try to cut off, try to stop as much or compress the bandwidth as much as possible. So we'll try this again. And we will. All right. Okay, folks. We had a little bit of technical difficulties here, but I guess everybody in the world is on the internet at the same time. So I don't know how much you were able to catch. Some people came in a little bit late, but I just want to give you an update on the CARE Act, specifically as it applies to small businesses. All right, so I am getting a message here. It says, just cut out shortly. You're fine, keep going. All right, perfect. So I'm going to go ahead and make sure that everybody knows. Okay, so we're talking about CARES, which is the Coronavirus Aid, Relief, and Economic Security Act. We're not going to go over the whole thing. We're specifically going to focus on the Paycheck Protection Program as it relates to small businesses. But just so you know, for those who were living in a cave, last Friday, the president signed a bill passed by both houses of Congress called the CARES Act, which is the Coronavirus Aid, Relief, and Economic Securities Act. This bill addresses the economic impacts and otherwise would respond to the COVID-19 outbreak. So it covers a lot of different industries, specifically goes into like the airlines, hotel industries, but we're really going to focus on the impacts to small businesses, especially this Paycheck Protection Program, which has forgivable bridge loans built in. Now, there also are grants and other technical assistance. $17 billion was set aside for this. But one of the things you're going to see about what we're going to cover today is that a lot of this is in gray area. A lot of it's still, I mean, the law was just passed. You have bureaucrats in Washington who figured it all out, but then it's left to the private sector to really put the pieces together. So what's happening right now is that the SBA is reviewing the law, and now they're trying to set up guidelines and select lenders, and then these lenders can then bring this to us. So right now there's nothing to apply for right now because we don't even have standards. But overall, if you didn't know already, there's $1,000 in tax rebates to individuals, $500 per child. So that phases out after $75,000, up to $150,000 for married couples. There's a lot of different things that have been put in here, different benefits, especially if you have retirement funds and you've had to pull out some money or some extra money so a lot of times people obviously get taxed when they take early dispersals of their funds. So they've eased up on that. And anyway, a lot of the information we're going over today comes directly just from what's been read in the bill. I went over this with our broker, and so I'm going to share with you the most up-to-date information that we have. But on your screen, if you need to take a screenshot, is the link that you can go and read the bill for yourself. Have fun. Now, let's focus on how this applies to you. The Paycheck Protection Program, PPP, right? You're in business, you got to start a business, right? So who can make these loans? Well, according to the law, lenders with delegated authority from the SBA. This lets lenders determine eligibility and creditworthiness, and they can do this without going through the SBA channels. So again, the SBA has, after this law has been passed, they're going to determine what those eligibility requirements are. What, let's say, what FICO score you need to have, what type of income or revenue you have to have made. Like they're gonna list out all of their different requirements for eligibility. And so, I mean, a lot of them are going to be very lax, but still we don't know what those are. And then once they set out what the guidelines are, then they're going to let us know which lenders are actually going to be able to give out these loans. And there's provisions within the law that will allow people that are applying, people like us, business owners, to actually sidestep the SBA and go straight to eligible lenders. There's also a possibility that they're going to use fintech, financial. These are the different types of lenders that are out there that are in the secondary market that give us access to funds that you might not be able to get from a bank like your Chase or your Wells Fargo or Bank of America, those ones that are out there. So how will banks evaluate a borrower's eligibility? Well, according to the law, it was any business that was in operation on or before February 15th of 2020. Now, if you started your business after that, then, sorry. But most of us that are already in business on or before February 15th and in good standing with our Secretary of State, so we're up to date on paying what and filing all our paperwork, right? So if you have employees for whom the borrower paid salaries or payroll taxes, or if you paid independent contractors as reported on a 1099 miscellaneous form. So this is really critical. You have a business, you've been in business prior to February 15th, and you had employees that you paid salaries to, or you used independent contractors, right? You qualify. Now, the application period, it starts according to the law between February 15th of 2020 to June 30th of 2020. That's when you can apply. Now, you can't apply today because the SBA hasn't finished the guidelines and they haven't listed out the qualified or eligible lenders. So until that is done, we still can't technically apply for this. The Paycheck Protection Program, size requirements. Who qualifies? Any small business, nonprofit, veterans organization, sole proprietorship, or independent contractor, eligible self-employed individuals, or tribal small businesses. Think about that. Now, the SBA, if you apply for a normal SBA loan, you can't be a sole proprietorship or an independent contractor or self-employed individual. That doesn't work. So you can see already by the language of the law, they're already easing SBA restrictions. So this is pretty exciting, especially if you're a sole proprietorship, you're like, woohoo. But keep in mind, this is the Paycheck Protection Program, which means that this is designed to protect workers to keep their jobs. Now you might be like, well, I'm a sole proprietorship. I'm an employee of my job. That's true. Depending on how you do your taxes, yes, that is true. If you are an employee of your business, then you count as at least one. But also, if you're using contractors or if you have actual employees, then they count as well. Now, this is a design for businesses that have 500 employees or less. And then they also make some stipulations that if you're depending on how many employees you have based off of your NAICS code, then what that second stipulation there means is that they're willing to, there's some wiggle room there. So if you're close, maybe you have a little bit more or less. Okay, so employees include anyone employed on a full-time or part-time basis. So again, easing of the restrictions. It usually is based off of full-time employment, but now they're including both full-time and part-time. And then it says or other bases, which again, we're talking about those independent contractors. Now, this is for businesses with more than one physical location as well. So if you have multiple restaurants, and so that means you might have way more than 500 employees. Keep in mind that they're going to go based off of each location in your chain. So each restaurant, does it have 500 or fewer employees? And so that's what they're going to base it off of. So even though you can have a lot of employees, but because you have multiple locations, it's going to be based off of how many employees are at each location. Now, again, about the Paycheck Protection Program, how much can you get? Well, based off of the wording of the law, it says up to 2.5 times the average total monthly payments. Average total monthly payments by the applicant for the payroll cost incurred during 1 year before the loan was made. So as I was talking earlier before we had our technical glitch, what I was saying is if you apply for a loan and let's say May 1st is when it starts, they're going to go back to May 1st of last year, 2019, and then they're going to look at all of your monthly payroll costs, all of your independent contractor costs, and then they're going to average what does that come out to. So let's say, to make math easy, your average cost for your employees was $100,000 once you add it all up. Well, then you could technically get approved for as much as $250,000 in a loan through this Paycheck Protection Program. Now, this is also, keep in mind that this program that was just passed last Friday is also part of a bigger package that was also approved before, a stimulus to the SBA before. So there's been 3 different bills passed. So the second one that had already been passed already outlined guidelines for the SBA for emergency injury disaster loan, or EIDL. And so that's for when you could show that due to the government shutdown of the private sector through this coronavirus breakout, that you had lost revenue, that there was actual harm to your business, losing employees because they were sick or different things, the productivity had gone down. So people started applying for those SBA loans. Now that was a true SBA loan. So you had to have business credit, you had to have a FICO score, you had to have cash flow, and you had to have collateral to put up for those loans. Now, what they're saying here is that you can't apply for the Paycheck Protection Program and get, say, like 250,000 from there, and apply for the EIDL and let's say get another 250 from over there and combine the two. Now, what they're saying is that if you apply for both and you qualify for, let's say, 250,000, then it's going to be so much of that is going to go into the emergency industry disaster loan side, and then the rest will go towards Paycheck Protection Program. But the total amount that you get would be like 250,000. Now, there is a cap on this. If you have a large business, let's say a whole chain of restaurants, and you have like 500 employees at each restaurant, this whole Paycheck Protection Program caps at 10 million. Okay. Now, there, according to the wording of the law, there are special rules for seasonal employers and businesses not in existence from 2015 or February 15th of 2019 to June 30th of 2019. So here's the thing. While there are special rules that the law states, those special rules aren't listed anywhere. So I don't know what those are. So those are special rules are going to come, I'm guessing, from the SBA once they lay out all the qualifications. So we'll just have to wait and see what that is. So when you're calculating, well, okay, how much did I pay my employees? What do I get to count towards my payroll costs? Well, anything that you paid your employees or compensated them with, salary, wages, commissions, any type of compensation that's like that, payment of cash tips or equivalent, if you paid for vacation or parental leave or family leave or medical or sick leave, if you gave some type of an allowance for dismissal or separation, say you furloughed an employee but you gave them still some benefits, or you actually had to let someone go and you gave them a severance package, you can include that. Payment for the provisions of group health care benefits, including the insurance premiums, that was the employer contribution side. And then payment for retirement benefits, again, the employer contribution side. And then anything that you put towards state or local tax on the compensation of your employees. The sum of such payments cannot be more than $100,000 in 1 year per employee. Okay. So as prorated for February 15th, 2020 through June 30th of 2020. Now, what can you not include when you're trying to add this all up? Well, you can't include an individual employee's salary in excess of $100,000. So what does that mean? In excess of? Well, they don't quite stay. This is a gray area, but the way I read that means that you could, if you paid somebody, let's say you have a manager on staff and you paid $150,000 or $120,000 to this manager. Well, it sounds like you could include $100,000 of that, but you couldn't include the $20,000 or the $50,000. Again, we've got to wait to see what the SBA guidelines are going to put out there. But this is the way that the law reads, okay? So the taxes imposed or withheld under FICA. So as you have to pay and put into the FICA, that's not what you can include as actual compensation that you count in your monthly average, okay? It's important that you start collecting this information right now, because there is no way to apply. But if you can get all your information together right now, when they do release the list of lenders that you can apply to, you'll already have all your information together. But you can't include any compensation for an employee whose principal place of residence is outside the United States. So sorry, but if you have anybody you're paying and they don't reside within the United States, you can't include them. And then it says qualified sick leave under the Family First Coronavirus Response Act. This is a special situation that applies in a very, very small number of people. So if that's you, you're really going to have to just talk to the person you're applying to. Again, the SBA has to lay out all these guidelines. So what can you use the loan for? Right? Well, you can really, obviously it's a loan, you can use it for anything. And then of course you have to pay it back with interest. But if you're interested in what you can use the loan for, because we're going to talk about how this loan can be forgiven, well, then this is what you can use it for. You can use the loan for your payroll costs. Costs related to the continuation of group health care benefits during periods of paid sick leave, medical or family leave, and insurance premiums. You can use this to pay your employees' salaries, the commissions, or other compensation. Payment of interest on any mortgage obligations. So if you're paying for a building, a business that you own, it includes rent. So if you didn't even own your building, but you're paying under your monthly rent or your lease agreement. Utilities for the business. Now, here's what's interesting. Look at this one. Interest on any other debt obligation that was incurred before the period. Isn't that interesting? So, I mean, it's not quite clear, but it seems that based off of the wording, that if you already have some type of outstanding loan, now the loan itself can't you can't deduct all that, but any of the interest that you've paid on a loan, which looks like it says before the period. I don't know how far they're going to go back, maybe to the beginning of this year, maybe to February 15th, but it seems that you're going to be able to use the money. If you pay down this debt, you're going to be able to deduct the interest off of that. So, I mean, that's pretty exciting, especially depending on the different loans that different businesses have out there. So, again, if you're thinking like I do, you got these little brain explosions. You're like, wow, that means I can my current loan that I have, I could actually, for this period of time, have it interest free. So it's just how you look at this and how you do your taxes. Again, you're always going to want to consult with competent professionals, legal, financial professionals, especially when you make decisions that have a financial impact to your business. Now, good faith certification requirements, meaning how are you going to show that you actually spent the money on what you said you would? Well, an eligible recipient applying for the covered loan must make a good faith certification that the uncertainty of the economic conditions makes necessary the loan request to support ongoing operations. What's that mean? If you're filling out the loan, you have to state that if I don't get this loan, I'm going to go out of business, right? I mean, I need this money to keep my business intact and to be able to continue to pay my employees, right? They acknowledge that the funds will be used to retain workers and maintain payroll or make mortgage payments, lease payments, and utility payments. All right, that's what you're going to have to certify. And that the eligible recipient does not have an application pending for a loan under this subsection for the same purpose and duplicate amounts of applied for or received under a coverage loan. And then they're also talking about from February 15th to December of 2020 to December 31st of 2020, that deem eligible recipients have not received duplicate amounts of the same. So those last two bullet points are saying the same thing. You can't apply for this PPP, right, the Paycheck Protection Program, more than once for your business, okay? Because there are people out there that try to scam the system. Now, also keep in mind that the EIDL, right, the Emergency Injury and Disaster Loan that's out there through the SBA, that's a duplicate loan, okay? So if you already applied for that, go ahead and stay in line, right? Don't take your application out. Continue to stay in line, but you might, when you get to the front of the line, when they are dealing with that, you might switch it to a PPP. Again, you'll just have to take a look at what you're qualifying for. But if you're already in line because of the last bill that was passed and you're trying to qualify for the EIDL through the SBA, don't pull your application. I'm not saying do anything drastic like that because you're already in line. Stay in line and then wait to see, because we don't even have the guidelines yet for this Paycheck Protection Program. So we don't, the SBA has not clearly showed us what this is here. Okay, so requirement and fees. This, according to the way it's worded, this is this Paycheck Protection Program is non-recourse, meaning the SBA has no recourse against the individual shareholder, member, or partner of an eligible recipient of the covered loan for non-payment of any covered loans unless it used for a purpose not authorized. So that means that if you borrow the money and you use it to pay your rent or your mortgage, or you pay your employees with it, and for some reason you can't pay it back, they can't come after you for that amount of money through your assets or anything like that. So it's very important. Non-recourse, very good. Now, also stated in the law is they're not looking for a personal guarantee. Now, this is where it gets kind of weird because this is an SBA loan we're talking about, right? SBA loans require collateral and they require personal guarantees. But here we have right here in the wording of the law, no collateral requirements, no personal guarantee is necessary. And they've also, in the last bullet point, they're waiving the fees, which is usually like somewhere between 3, maybe to even as high as 7%, right? So of the loan that you borrow, you'll have to pay in fees. They're waiving all fees. So it's a lot of this. I mean, when they're waiving all of these requirements, it's really curious to those of us in the financial world looking for these requirements is, so what restrictions are there going to be? Is there going to be a revenue requirement? What type of FICO scores are they going to look at for the people applying? So it's really unclear at this point, but it's looking like, based off of these guidelines, that they're really easing the restrictions. This doesn't look like this is going to be your traditional SBA type of loan. So they're also saying that you're eligible for a deferral of payment. So from February 15th of 2020 to June 30th of 2020, there is a complete payment deferment relief for impacted borrowers with a loan with terms of 6 months to 1 year. So you qualify for the loan, you get your money, and it's a 6-month loan or a 1-year loan. Well, what they're allowing you to do is defer your payment. This includes payment of principal, interest, and fees, but they already said that they're waiving the fees. So this is really powerful. Now, an impacted borrower is one in operation of February 15th of 2020 with an application for a covered loan that is approved or pending after the enactment date. So as long as you get your application in before June 30th, right? I mean, it might, because who knows, if they don't open it up to the secondary market, the fintech we were talking about, then and it just overloads the bank system. Well, then as long as you got in line, you got your application in before June 30th, then all of the benefits, even the deferral of payments, is going to stay with you up until you get approved for this loan. So loan forgiveness. This is the part that's the most exciting that everyone's heard. So they're lending out this money, but there's the chance that you can get this forgiven. So how does that work? So what is covered for the sum paid for 8 weeks from the loan origination date? Well, the payroll cost, any payment of interest on or covered obligation, any indebtedness or debt instrument incurred in the ordinary course of business as a mortgage on real or personal property incurred before. So look at that, incurred before February 15th of 2020, any payment of rent made under a lease agreement in force before 2015 to 2020, and any utility payment for electricity, gas, water, transportation, phone, internet, where service began before February 15th of 2020. So, I mean, this is great. So if you have a mortgage, if you have any loan that was originated, if you have a lease agreement, any of your utilities, as long as they were in place prior to February 15th of 2020, these all are things that are covered. That if you use your money that you borrow for these types of expenses, then you can get your loan forgiven. So the loan forgiven, the document the borrower must provide. So you have to provide verification. You can't just say that you did it. Verification for the number of FTE employees, FTE, full-time, employees on payroll, and their pay rates, including payroll tax filings reported to the IRS, state income payroll and unemployment insurance filings. So if you're a business owner and you have employees and you have all your payroll information, then this is what you're going to have to show. You're going to have this paperwork that you use to report to the IRS. You're going to have to show this to your lenders to verify that you use the money for the payroll. Now, if you're paying for other things like the mortgages or the leases or the utility, you need a canceled check, a payment receipt, something that showed with the date that you made the payment and that the payment was received, right? So keep this in mind. As you're collecting all the information on what you've paid your employees, you also, after you get the loan, you need to be keeping all of your information that you have. So certification from an authorized representative of the eligible recipient is going to need the they're going to verify that the documentation that was presented is true and correct, and that the amount for which forgiveness is requested was used to retain employees. Now, according to the law, they're talking about retaining 90% of your employees. And the way it's worded is it seems pretty clear that they want you to retain employees and keep paying them at the current rate. So you can't keep a full-time employee and then change them to part-time. Or so the goal of this is the Paycheck Protection Program is trying to protect workers' jobs and their money. So if you want to make sure you're getting this loan forgiven, 90% of your employees need to be retained, and they need to be making what they were making before this shutdown. So keep that in mind. That's how I mean, again, they haven't laid out all of these criteria. I'm just telling you about how the law reads. What the SBA actually determines is a whole nother story. But I'm just trying to put this out there for you to consider. So no eligible recipient shall receive forgiveness without submitting the required documentation. Now, the reduction of loan forgiveness. A reduction can happen if there is a reduction in the full-time employees when comparing to the average number of full-time employees per month. So if you don't retain your full 90%, then you might be able to get a reduction, meaning you might not be able to get a full 100% forgiveness of the loan, but you could get a reduction of what you need to repay reduced. So reductions happen over 25% and certain reductions in total salary or wages of an employee. These are employees who in 2019 did not receive a wage or salary at an annualized rate of more than $100,000. There are special rules for tipped workers and rehires during a certain time period. But are those special rules out there yet? No, they're not. Again, this is what the SBA is working on right now. And so, as you can see, this is a really huge law that was passed. And the SBA, I'm guessing right now, is scrambling to try to come up with all these special rules and laws for seasonal workers and part-time and full-time and all the other questions that are going to come up. So where are we at today? All right, this is just to look at, here's where we're at. The bill passed, okay, last Friday. Then the bill was sent to the SBA. Now the SBA is determining the guidelines. That's where we're at. The third bullet point is where we're at today. Now, what does the SBA need to do? They need to pass guidelines to the lenders. And once they've passed all the guidelines, they have all the rules, how to qualify, who qualifies, what doesn't qualify. Then they also determine which lenders can participate, because the SBA, once they determine the lenders, they're going to back these loans, but they're only going to back the loans for certain lenders who will follow the guidelines that they set. So this is what we're waiting for. This is the big, yes, tell us who it is. And the rumors, nothing official, but the rumors is they're going to bring in financial tech lenders, and these are the different secondary market lenders that are out there. That especially that Wise Guys and Ties refers to when we use our broker to help try to get people all kinds of money that's out there that they can't normally get through the banks. See, the banks are completely overwhelmed right now, especially with all the EIDL, the emergency injury disaster loans that everyone's applying for. Well, they're completely overwhelmed right now. So that's why there's a rumor that the SBA is going to open it up to all kinds of lenders that are out there. So there's also wording in the law that looks like that if the SBA is going to open this up to other type of lenders. So the law, according to the bureaucrats in Washington, they're saying that the funds are supposed to be available within 36 hours. Now, I don't know how that's possible. I mean, also if we're talking about large sums of money, up to $10 million, that seems like a disconnect between what bureaucrats do and what the financial services actually have to make happen. But it seems like they want to move very fast, which also leads to why they might move to secondary markets, secondary lenders, that is, because a lot of your big banks, your Chase, your Wells Fargo, they have so many different guidelines that they have to follow that it slows down the process and it takes a long time to get money, whereas a lot of these secondary lenders are ready to go right now, and they can usually get lending in a week or less. So that depending on the wording of the law, it looks like the SBA might allow that, but then of course they would have to step out of the way. And then if you could bypass the SBA, that would make everything that would make everything faster. So a question that a lot of people have been asking is, well, what do I do if I already applied for the emergency injury disaster loan through the SBA? Well, right now, because we don't have any guidelines for the payment or the Paycheck Protection Plan, we're advising you to just leave everything as it is. Okay, so folks, this is where we're at today. There's a lot of exciting things out there. There's a lot of information. I want to open it up. If anybody, we've got a lot of people on the line here. Maybe we've got some questions or some people are curious. Go ahead, type into the chat box if you have any questions. But this is what I wanted to share. This is critical information that you need to have, because these guidelines are going to be coming out, I'm assuming soon, at least before June 30th, because you got to get your application in. But there's nobody to apply to because they haven't listed the lenders yet. So, but we need to know what it is and who qualifies and how I mean, that's what's really important is how it works and who qualifies. So let's see. We did get a question coming in here, and we have, who will have access to SBA approved lenders? Who will have that? Well, whatever the SBA approved, if they say it's all the major banks, I mean, you have access to all the major banks. If they open up to regional banks and credit unions, and if they open it up to all kinds of lenders, online lenders, I mean, we'll just have to see. And the question is, will you have access to SBA approved lenders? Well, yeah, through our referral program, our broker has access right now to all the SBA loans, micro loans, non-recourse commercial collateral loans. I mean, all the SBA programs are still in place, and we have access to all those. Another question coming in is, are the requirements for the EIDL the same as the PPP? No, the requirements for the emergency injury disaster loan are strict SBA loans. So you need business credit. You need a FICO score, I believe, of over 600 or 650. You need to have verifiable revenue. Now, they do recognize that your revenue might have gone down, but they're going to look back over the last 6 months. Actually, they're going to go back 1 year according to the EIDL. So they need to see over the last year that you have verifiable revenue. And then there's some collateral component. Now with the EIDL, they've waived the fees, so that's good. So that means anywhere from 3 to 7% of the origination fees have been waived, and they're not requiring the full 3 years of background, right? They're only requiring 1 year. So the EIDL is still a stringent SBA qualified. I mean, you need business credit to qualify for sure. So, but with the PPP, it's I mean, they don't have all the guidelines out, but it's not looking like, based off of the way the bill that was passed in Congress, doesn't look like it has the same stringent requirements of a normal SBA loan. All right, so the next question is, where do you get an application? No, that's a great question. The SBA hasn't released the guidelines yet. So and they haven't listed. Once they release the guidelines, then they approve the lenders. And then once they release the guidelines, they approve the lenders will then generate an application for you to fill out. So those steps haven't happened. So there is no application at this point. So there's no way to apply, but that doesn't mean that we can't get ready. That doesn't mean that we can't go back and look at last year's payroll and figure out what our averages are, and look at what we can include in our payroll calculations and what we must exclude, right? So we can start getting that information together now so that we're ready when the application does come out. These are all great questions, guys. I want to thank James and Demond, and I mean, there's a lot of great things that are coming out here. James has a link for SBA Paycheck Protection Program sample application form. So, right, there are people out there that are trying to get ahead of the curve and trying to collect some information, and the SBA has a lot of information that they normally collect. If you've already applied for the EIDL, you can probably still keep your line, because there's a lot of people that applied, but you might be able to simply convert that over if you decide that it's better to go for the Paycheck Protection Program. I think because of the simple fact that there is, it's non-recourse and there's no personal guarantee that's required, and that the loan is forgivable, those three things make the Paycheck Protection Program, for me, more desirable than the EIDL. That's for sure. So I'm excited about that. But you could you can go to the SBA and I mean, and your banks are probably all contacting you right now, sending you out links that, hey, this is happening, and go ahead and apply today. Again, the applications that they're giving you right now without any guidelines are just trying to collect some first round preliminary information. They're still waiting on the guidelines from the SBA. Once those come in, then there'll be additional information that you'll have to provide. So I have James says, you have your finger on the pulse of this. Will you let us know when we get a green light? Absolutely. We've been trying to release every time we get information. As soon as I get it, I got this information on Tuesday, but let me tell you, it's a lot to disseminate. It took me a couple of days to go through it. I had to work with my broker to make sure that I understood everything, because when I bring it to you, I want to be able to be competent and be able to answer questions for you, so that you can benefit from this. Because I have to tell you that I didn't understand everything as it came out, because and really it's because the SBA hasn't released guidelines, and there's rumors everywhere. We just don't know. There's a lot that we don't know, so we're speculating. And what about this, and what about that, and well, my business, what if I run a home business? Can I deduct part of my mortgage? What if I use money that I borrow to pay my mortgage or my home utilities? Well, because the SBA hasn't released any guidelines, there's just is no answer to that. So I mean, my mind starts immediately asking all these questions, because I'm always looking at the angle. I'm thinking about you guys at home. I'm thinking, well, what questions are you guys going to ask me? You're going to ask me all these questions, so I got to know it so that you guys will know it. So again, we're staying on top of it here. For more information, or if you want to consult, or you want to work with, because our broker is going to be able to help you apply for the Paycheck Protection Program, but they're not going to be able to do that until the guidelines are released, of course. But if you're looking to bypass a bank and jump through their hoops, because whenever you go through a major bank, Wells Fargo, Bank of America, it doesn't matter who they are, even if the SBA releases these nice, easy guidelines, you still, if you go through a bank, you have to go through their guidelines, two sets of guidelines, your bank's guidelines, and then whatever the SBA sets up. But if you want to bypass the bank and go straight through a broker direct to the lending source, that's an option that you can consider. What we want you to do is give us a call. Let me see if I can get out of this PowerPoint here. And real quick, I want, let's see here. You got to give me a moment here to make my computer work. All right. Here's what I want you guys to do. If I can just show you right here on my screen here. Hold on. Let's take a look at this. All right. You're now seeing my website. This is wiseguysandties.com. So we help people build business credit, which is essential for applying for a normal or regular SBA loan. You must have business credit. You need business credit to get corporate credit cards for your business. Now, you can personally guarantee corporate credit cards, but again, that's you using your personal credit. But if you want your business to be able to qualify for its own line of credit or its own credit cards, we help you with that process. So this site is dedicated to business credit, but we also, which a lot of people don't know and understand, is we also do referrals to brokers to help you get access to direct funding for your business. And the Paycheck Protection Program is direct funding for your business. So if you go to schedule a time with us, you can schedule a 30-minute consult, and you can see these are the dates and times where we have availability where you can meet with us. We're going to collect some basic information, your contact information, basically, from you, and then we can then put you directly in touch with our loan officers that we work with, and then you can start collecting and getting the information necessary so that you can apply for this Paycheck Protection Program. We want to do everything that we can to help businesses thrive and grow and succeed, because these are challenging times. And if there is an opportunity for you, I mean, let's say you have one employee and you pay $1,000 a month, right? And that's the average it comes out to. Well, if you can get even a small little loan for $2,500 for your little business of one employee, that $2,500 can cover the rent, it can pay some insurance, even if you're a small little operation, or if you're big, right, and you got 500 employees, right? Every business, regardless of your scale, should be looking at ways during these hard economic times to get access. I mean, the main message I want to give you that is if you should be doing everything you can to get access to as much money as you can. Now's the time. If you have a scarcity mentality and you're scared and you're fearful and you're panicking, you're going to start closing in. And you're going to start backing away. And those are the businesses that are going to fail. This is when you see that, look, maybe the ship's sinking. Let's worry. Let's start getting buckets and throw the water overboard, or let's get the lifeboats. You have to take action. And the people that are panicking and say, you know what, this is a scary time, I'm going to hold on to my money, what I got. That's a scarcity mentality. You've got to think abundance. Even the economy is always going to go through things. If it's not this, it's going to be something else. I mean, we've been through the Great Recession. We've been through the housing mortgage crisis. Before that, there was the dot-com bubble burst. I mean, there's been ups and downs in the economy all the time. There's always going to be something. Don't panic. Stay calm. This is a critical time that if you can get access to money, go for it. Use a personal guarantee if you need to get access to more lines of credit or corporate credit cards for your business. If you haven't built business credit, build business credit. If you need help doing that, you need to contact us. This is how easiest way to do it is go to our website, wiseguysandties.com, click schedule with us, and you can meet with me. You can meet with Ray Fleming, and we're here to help you. Make sure that you know all of your options that are before you. It doesn't cost any money to talk with one of our loan officers to see which direct funding options are available to you. Does it cost money to utilize our coaching and our software that helps you in real time build your business credit and get you access to the underwriting guidelines for all the major credit issuers out there? Yeah, there's a cost involved with all of that. And we can discuss that. You can go to our website under pricing, look that all up. Go to about. We have an FAQ section. You know, this is maybe one of the most underused areas of our website, but we answer all kinds of questions about everything that we can. Our goal is to help you make informed choices, because we know that the educated, informed business owner is going to be able to take the right course of action to make their business grow and succeed. Now, I've reached my time limit. I want to thank you so much for being a part of this webinar. If you have any questions at all, you give us a call at 888-524-9273, or go to our website and schedule to meet with us. Again, stay calm, folks. We're going to get through this. Remember, life comes with a certain amount of risk. Even with credit, how do you know what kind of interest rates you're going to get? It's all based off of your risk. Listen, you're going to be okay. Everything's going to be okay. Let's work together. If you need somebody because you're worried to pray with you, let's pray with you, right? If you need a plan of action, you need a team, a financial team working with you, give the Wise Guys and Ties a call, and we will get our financial advisors working with you, our loan officers, and we'll come up with a plan to help you succeed, even when it seems like everything is going crazy right now. I want to thank you so much for being with me on this webinar. Have a good night. God bless.